Welcome to Drill Down Earnings. We have quarterly results from Supermicro, or do we? This was a funky quarter because this company can't even figure out what its own numbers are. Their auditors quit. It's funky over there at Supermicro, but we can get funky. This is the business story behind that stock on the move. And the stock was moving down. As bad as things have been at Supermicro, they got worse once these semi results were out. This was Q3 earnings, and this was less than the company's own guidance, let alone what Wall Street had hoped that they might do. I say it's less because they gave us a range. They said it was $5.9 to $6 billion. What's $100 million to friends? How should they be expected to count on all those monies? Well, they can't quite come up with a number. They gave us a range, but it was below their guidance, well below what their guidance had been, and their guidance was quite wide. They also said the profits for this business the profit margins were well off, even though they gave us a range there. They also gave us guidance for next quarter, and while the range was quite wide, if you take the midpoint of that guidance, it shows a real slowdown of the growth of this company, and with all these accounting problems, you kind of wonder what's going on there. What accounting problems? Maybe you're not keeping up with this story like I am. Well, they came out and said they couldn't file their 10K at the same time that a well-respected short-selling firm came out with a lengthy report about the problems at Supermicro. I want to go through those problems, but first I want to quote what we do know was said in the auditor's resignation letter. Ernst & Young stated, "We are resigning due to information that has recently come to our attention, which has led us to no longer be able to rely on management or the Audit Committee's representations, and are unwilling to be associated with the financial statements prepared by management." They cited the law and professional obligations. That's the worst letter from an accountant I have ever read. And I go through these letters for fun because I have a really boring life, except for reading these letters from accountants. But this was a really brutal letter from the auditors. Now, they didn't even share the whole letter with us. And Supermicro said that they didn't think they would need to restate anything. Ernst & Young specifically said that they did not agree with the statement that the company might not need to restate their financials, but Ernst & Young will not be around to see that happen. There's a new auditor on the scene. Supermicro telling us today that audit should be done with their work and they might be able to issue a 10K later this week or next week, but their special committee, however, said that things weren't bad, Supermicro. So maybe the special committee is to be trusted here. You know who doesn't trust them? Hindenberg Research. When they came out with that scathing report on August 27th, they headlined it, "Fresh Evidence of Accounting Manipulation, Sibling Self-Dealing, and Sanctions Evasion." At this AI high flyer, Supermicro certainly is that. Now, there's a history here. In 2020, Supermicro settled with the SEC for a $17.5 million fine after admitting to $200 million of improperly recognized revenue. They also were delisted for a short while. There are a lot of known dealings with the CEO's family, numerous related party transactions, some of which are disclosed in their 10Ks. Hindenberg thought that they found even more. Hindenberg also maintains that the company's been selling stuff to Russia through other parties when they shouldn't be during this era of sanctions, thanks to Russian invasion of Ukraine. What we do know about the numbers, even the numbers that they told us that can be relied upon today, the range of guidance suggests that their margins are coming way down to 6% when they had been as high as over 10% even within the last year. So margin decline, not good. And going into this, they had fantastic growth in their server and storage systems. That growth now coming off quite a bit. So the result was stock fell 15% in after-hours trading. Even it was only up 9% for the year. So now the stock's down for the year, even though they're selling the very devices that should be the hottest thing in the world, which is NVIDIA-loaded computing devices going into data centers. Hindenberg says that in the midst of competition with companies like Dell, that Tesla, Amazon, and DigitalOcean are all cutting ties, pointing out to quality and service. And then you had these results today. Charles Liang, the CEO, said that they're having trouble getting chips from the newest chips from NVIDIA, and for that reason, their customers are slowing down. No one else is saying that, but well, here's what Charles Liang had to say on the conference call today.
Last quarter revenue reduced a little bit. I guess the major reason because there are some customers waiting for the new chip, the Blackwell chip, as you know. So people are waiting for the new solution, and the new solution, the Blackwell based liquid cooling, air cooler, or GP200. Our solution indeed is ready. Just waiting for the chip. So I guess that's the major reason. And our capacity continue to grow, and our liquid cooling solution is fully ready. Again, we can produce 1,500 liquid cool rack per month now. So we are fully ready. Just waiting for the new chip to be available. And then I believe we can grow our market share and revenue after that.
So he still thinks they can grow market share and grow revenues once the new NVIDIA chip is out. That remains to be seen. These slowdowns that they're reporting are not what we're seeing from any other company out there. So we're going to keep an eye out to see what we see on a comparative basis. But what's it all mean? What's your big drill down earnings takeaway? Well, Supermicro Q3 earnings were not reported because the company couldn't come up with the numbers because their accountants quit. Their accountants quit because they said they didn't trust management or trust the audit committee. But they gave us a range of third quarter and of the upcoming fourth quarter revenues. And what that showed is a real slowdown in growth. 58% growth on a year-over-year basis would normally be good, but when a company was growing at nearly 200%, raises some questions. And thanks for checking out Drill Down Earnings. I'm Cory Johnson.